Fed's latest rate hike cost credit card holders $5.1 billion. Yeah, that's per 75 basis point hike. They going to do a 75 basis point hike again? They might do 50. It doesn't matter. I'm going to show you in a second. But these are credit cards and revolving credit. And you can see that they far surpass where we were in 2020. And you can see also from, well, forever, that the credit card balances just keep going up. But now more people are using them just to buy food and gas and energy and the things that they need. So that's happening while at the same time interest rates are going up. This is a huge problem, and I hope you can see that. Aggressive central bank tightening has piled on billions in additional interest costs. So if the individual could not afford the food at the grocery store and they put it on a credit card and they're not paying that credit card off every month, now they're tacking on all of that interest, and before you know it, some people may be already compounding that interest. You ever getting out of debt when you do that? Nope, not at all. This is what that looks like. All right, here you go. 75 basis points, $5.14 billion in additional interest costs. But let's say the next one is 50 basis points. That's still $3.42 billion in additional interest costs on these credit cards. And even if they do a 25 basis point move, that's still $1.62 billion. Do you see the problem? And these credit cards are compounding that problem on top of the inflation and the prices that everybody's having to pay for things. So what do you think? You think we might have a distressed consumer as well? So we've looked at a distressed treasury market where the treasury may step in to buy the treasury bonds back. You see the stressed or distressed corporations with higher interest rates and higher costs, and the distressed consumers. I'm thinking we got a real problem on our hands here. And here, though, is the opportunity. I'm going to show this to you just in this one little piece, because this Chinese reseller is buying up used Rolexes, Hermes Birkin bags during the economic slowdown. You think they're paying retail? I don't think so. He said the number of ZZers, consigners, or people putting up their goods for sale has soared 40% so far in 2022, because this is also a forced sale, right? If you need to raise capital, you're going to sell whatever the market will buy. The platform now has 12 million members, but eventually, because these are not income producing assets, but this is where it starts, right? So when you need to come up with money, you will sell whatever the market is willing to buy. And when that happens, what do you think happens to prices? They start to come down, not just at the resellers, but also you're going to see it happen at the corporate level too, because they're now going to have to compete with this, but they're also going to have to come up with money. Forced sales. If you have gold, when these opportunities present, you are going to be able to convert your gold into we're not talking about handbags, but you're going to be able to convert this gold into income producing assets, so that on the whole other side of this mess, you come out better, because you're not in a position to have to sell forced sales. Corporations are in that position, individuals are in that position, and maybe even the government is getting in that position. But you are going to be in a position to take advantage of these opportunities.